Hello, friends, and welcome to this interesting webinar on private equity tadka in the world of mutual funds. Friends, so far we have seen different style in fund management like value, growth, and momentum. But what if I tell you that there is a fund house which will integrate private equity tadka in the world of mutual funds? Yes, recently the Wealth Company has come out with four NFOs, including a flexi cap fund and an ethical fund. So the fund house will going to integrate private equity strategy to manage these funds. To talk more about this, we have invited Aparna Shankar, Chief Investment Officer, the Wealth Company. Aparna has over 30 years of experience in equity fund management and research. In the past, she has worked with SBI Mutual Fund. So without wasting time, let me welcome Aparna. Good evening, Aparna ji, and welcome to the show.
Thank you so much, Nishant, for this, wonderful opportunity. Uh,
Great.
I'm really grateful for this.
Great, Aparna. So Aparna, so I'll start with a question that private equity has traditionally been an asset class for ultra wealthy and institutions. So what's driving its tadka in the mutual fund space now?
Okay, a great question to begin with. See, the move of private equity into mutual fund space is a broad part of a broader shift towards making the alternatives investments more accessible. Okay, and which is driven by investors' risk appetite. I think there are very conducive regulatory changes, and then there is a innovation in the fund structure. All these factors put together, I think there is better appetite for this kind of more riskier products, and because the investor want to have these products, that's why there is a demand for, I mean, since there is a demand for these products, we manufacturers are able to come out with these different products. So it
Great.
is what the investor is looking for, and that's why we are providing that.
Great. So, Aparna, you know the mutual fund industry very well. So, you have worked with AMCs like SBI Mutual Fund in the past. So, but the wealth company is backed by Pentomath Group, which is a very well-known name in the AIF industry. So, what key lessons from private equity culture that you will implement in the MF industry to give impetus to the fund management?
Correct. So I have been working in the mutual fund industry for almost 35 years now. First, in initial 15 years, I was with Unit Trust of India, and then the last 17 and a half years with SBI Mutual Fund. Both great institutes. I mean, they had their contribution to the mutual fund industry.
Mhm.
Great contribution by both these institutions. So what is different is that kind of an agility
Mhm.
which a young AMC has. I think Pantomath Group has that a lot. I mean, the way we have been functioning, and just really think about this. We got our license of a mutual fund fastest, and on the day of getting the license itself, we launched multiple schemes. I mean, we filed SIDs for multiple schemes, and I think we were the first one to launch four products on the
Mhm.
same day. I mean, the
Mhm.
four schemes are open on the same day. That's the kind of thought process or the agility or the quick action or maybe your decision making speed is what is different at
Mhm.
this young AMC.
Mhm.
Also, Pandamet Group is present into AIF and PMS. They are
Mhm.
already managing almost 10,000 crores under these multiple offerings.
Yeah.
And the AIF is a category 2 AIF, which
Mhm.
means that they are invested
Mhm.
more than 80% into unlisted companies.
Yeah.
And when you are investing in a unlisted company, there are two major constraints in the sense that there is a lack of information, and then there is a lack of quality also of the information. I mean, you may have some information, but whether that information is reliable is not or not is what you have to analyze and then take decision to invest in a company. So
Mhm.
that needs a huge deep dive. I mean, you have to actually employ, you don't get out direct information. You
Mhm.
have to connect the points, use a mosaic theory, if I can say, use that word,
Mhm.
and think about it. Okay, this is related to this, and this is related to this, and then there is a outcome, and it could be a probable outcome. So that kind of a deep dive is required.
Mm,
And that's why, the group has, acquired tech-enabled business also,
mm,
and which helps them to go through the multiple businesses and get a granular data
mm,
to the extent that they're also looking at, not only the promoters' CIBIL score, but even
mm.
top management CIBIL score,
Oh,
whether the GST filing has been done on time or not,
mm,
whether PF contribution has been paid or not. So
mm,
if one company might say that I have 300 employees, but the
mm,
PF contribution is paid only for 250 employees. So
mm,
these are the kind of red flags, and
mm,
this tech-enabled platform helps us to, identify those red flags. Then we can interact with the management, engage with the management, understand what could be the reasons, and then, try to improve them, their compliance, and all that stuff is what is that kind of a, deep work what we are planning to employ or implement here at a mutual fund also. So it is always helpful from a corporate governance, angle, or maybe what has been the transparency or the accounting standards and all that. I mean, if we are able to identify any of these concern areas early in time, it
mm,
helps us to avoid the accidents.
mm,
And that is what is important than, generating higher returns or something like that. If you are able to avoid accidents, that
mm.
protects your downside, and that's what helps in even the listed environment.
Great, great, great. So you talked about
And
the
another thing is that this is also about, focusing on how not to get stuck in any of the business. In
mm,
a sense, AIF always thinks about whether this company is, IPOable in next 3 years or not.
mm,
What we can, refine it for us is that when we are entering a stock or buying a stock, we are clear about the factors when should we exit this stock. So then there is no human bias, there is no, emotional connect or attached to it, and then the decision making is also easier and better.
okay. So you talked about the deep research that you will imbibe from the PE model.
Hmm.
You also talked about the exit strategy. So can you throw some more light on this?
Correct.
When you will exit the stock, can
Correct.
yeah.
Correct. So we have an investment philosophy which is a change plus age.
Mm,
Change relates more to the internal environment of a company, which is more controllable by the management and leads to the earnings growth. What is into external environment also impacts the how the stock may
mm,
perform in future. So that is what we call as valuation, kind of growth. So
mm,
in valuation growth, we should also be we have included, exit strategy or rebalancing strategy as a part of investment philosophy. So
mm,
when you are entering a stock,
mm,
if we have some set factors, in a sense, if there is a better opportunity than the current opportunity, then you should switch to another stock. Why to get stuck? Or
mm,
maybe, I mean, we buy a stock with a 3 or 4 years horizon, but
mm,
in some many times it happens that the stock gives that kind of a return, so the what you were anticipating to happen in 3 4 years happens in 1 1.5 year.
mm,
So should we stay invested in that stock because that stock has done in the past, it has done well, it has contributed well to the stock, fund performance?
mm,
No, if we have a better opportunity, we should switch. It should
mm,
not matter for us whether we are invested into A, B, or C. It only should matter what is the kind of returns you are able to generate for the investors. Another thing, what happens is that some management take kind of a bold decisions, diversify into unrelated businesses.
mm,
So if that is not good for the company, I think it is not good for the investors also, then you have to switch. So, and if another third thing what I can talk about is the
mm,
competitive intensity of a business. If the competitive intensity is increasing, then in future also that kind of a, there will be a pressure on margins, the earnings growth may be slower than the sales growth or revenue growth. So then the valuation growth gets impacted. So these will be the, broadly, these will be main, I mean, few of the many factors what
mm.
we would look at while we are at the, invested in any particular stock.
Great, great. Good to know that you're not marrying any particular stocks.
No, we are not.
So we
We
have
should
seen
not.
many stocks in portfolio. We have seen it in the past with. So how does this approach differentiate your scheme from traditional mutual funds in the markets, Aparna? The
Okay,
private equity.
great.
Yeah.
Yeah.
Mm,
So great question. When we were, brainstorming which fund to launch first, I think largely we were tilted towards FlexiCap to be a flagship fund. The characteristic of FlexiCap, I mean, the flexibility which it really offers to the fund manager is amazing. I mean, that is not available in any other of product. So the fund manager has a, flexibility to switch between different market caps depending upon the emerging opportunities. So that is the kind of a flexibility we have. But when we were thinking of launching this fund, we also realized there are almost 39 other FlexiCap funds. So how do you differentiate?
mm,
And there is an advantage of being young also. So you are learning from the biggies. Okay, you are observing them, you are learning from their flaws or kind of shortcomings. I won't say mistakes, there could be some reasons for that, but then you are learning, and then you can do better than them, is what we feel we can do. And that's where we had two observations basically, is that the most of the funds, though they were called flexi cap, they were largely positioned or invested into large cap, almost 60-70% into large cap.
mm,
And that's where we failed, and that the in the last few years mid
mm,
and small cap has done better. Then
mm,
why the industry is largely into kind of a large cap? I think there was a lost opportunity. That's a
mm,
learning, and then we have kind of gone back on the drawing board and understood, I mean, try to think about what methodology we should adopt and all that to have a better agility and better switching between different market caps, so that
mm,
we are able to generate better returns for the investors. Another thing what we observed is that almost all the funds have more than 60 number of stocks,
mm,
and the research or maybe studies suggest that diversification is optimal when it is 30, 35, or 40 number of stocks. Beyond that, it actually hurts, or it contributes negatively to the fund performance. That was
mm,
another major learning, and we could I mean, that's what another decision we took, is that we will be optimally diversified with having 40 to 50 number of stock depending upon our AUM of that fund.
mm,
That was the, I think that's how we will able to differentiate. And because sizing is very important, if you have a high conviction in any stock, you should have it higher.
mm.
Why you should not have it? But if you kind of have a long tail, then there are marginal weights which are less than 1%. That means you don't have a conviction and you cannot size it up.
Okay. So, Aparna, talking about the markets now. So, markets haven't seen any significant corrections over the last 5 years. And this is very rare incident, I mean, very unusual. So, despite Trump and ongoing geopolitical tensions, markets largely have remained resilient. So, why do you think that markets will continue to go up?
I think specific to Indian markets is that even after the market at the current level, the penetration levels are very low.
Hmm.
I mean, there is a lot of money which is coming into the Indian markets, from different vehicles. You can see the SIPs, the PMSs, and the provident fund money, the NPAs. So many, avenues are contributing to the size of the mutual fund industry.
Hmm.
Okay, that is one reason. That means that there is a lot of demand, and then the supply in the form of new companies getting listed is low. So that
Hmm.
is, there is a classic, kind of demand supply gap kind of a thing, and that's why the valuations are at a elevated levels. Another thing is that there is a geopolitical risk fatigue also. I mean, in last few years, I think pre-COVID or post-COVID, we have seen so many disturbances, political disturbances, geopolitical disturbances. I think we are taking it in our stride faster and saying, okay, this is going to be a part and parcel of the the whole economy or the whole globe coupling together, and there will be some interested or some dissatisfied people who would, make these things more difficult. And I think general or maybe common investor is looking beyond that, and then the equity is the most important or most, lucrative kind of a avenue to create wealth is another factor. And if you think it broadly, in a sense, if inflation, remains at current levels or maybe lower than this, and if there are no major recessions, this could be the kind of valuations will, sustain for longer period of time.
So, Parna, talking about the valuation front, so SEBI data shows that Indian markets are currently second most expensive in the world.
Hmm.
Are we in a zone of froth? What's your take on valuation?
Okay. So second expensive means US is ahead of us, correct?
US is the
Okay. So
topmost.
there is one developed country which is ahead of us,
Mm.
and we are in the race to become a developed country. Okay.
Mm.
And I mean, numerically, if India is at around 22, 23 P 1 year forward,
Mm.
which is at premium versus other emerging countries, which are, kind of trading at 11, 12 times 1 year forward, 12, 13 times 1 year forward. But India's ROE
Mm.
is almost 35, 40% better than the emerging countries, other emerging countries' ROEs. So I
Mm.
think part of this premium is, kind of is required.
Mm.
It demands that kind of ROE, demands the premium, some part of the premium. And if you compare India against the developed countries, like US is ahead of us. But I think when you look at a PE or maybe the what current PE is, if you you need to deconstruct. So there will be a regular growth, and
Mm.
there will be some part of that will be optionality also. So
Mm.
I think there is that optionality which is at play for India for its journey from being a developing country to a developed country.
Mm.
I think, I mean, when I think that that's what I feel ki it's a more rational, kind of a way of looking at it rather than just saying that, okay, we are at a very elevated place. But because, I mean, this kind of, phase we would have seen in China also when it was, becoming from developing to the developed country. Uh, Another thing is that earnings growth versus expectations.
Mm.
If you know, I mean, September was the first month, September 25 was the
Mm.
first month where the earnings upgrades are higher, I mean, more. This is happening for the first time from July 24. So there
Mm.
was a more than 1 years of earnings downgrade, and this is the first month of, month on month earnings upgrade. So I think there are what you say early shoots, I mean, green shoots of, earnings growth, and that will also help to keep the valuations at maybe elevated levels.
Great, great. So you're confident that currently we are not at very high valuation. There is a reasonable valuation in the market.
If you put it in a different way, I think we are not able to find what could be those reasons, which will bring the markets down. I
Mm.
think
Mm.
that
More.
is more relevant than whether the markets are at a higher level. I mean, this is all learning, no? I mean, even if you look at any geopolitical trouble,
Mm.
it's all about rippling effect. Okay.
Yeah.
So how the countries behave, why that, what is that impact of that country's shortage? I mean,
Mm.
oil had gone into shortage when the Russia-Ukraine war happened. What
Mm.
were the effects of that on
Mm.
some other countries? How did they evolve, and how did they surpass those troubles is very important.
Okay. So, Aparna, one unique thing about the wealth company is its approach to risk. So, I've heard Nishad saying that wealth company does not believe in higher risk necessarily translate into higher returns. In fact, he argues that higher returns can be achieved with lower risk. So, can you help us understand your approach to risk?
Yeah. So let me, kind of flip this question and say that lot many times I get this question. Okay, will you be tilted or invested more into mid and small cap? Will it not lead to higher risk?
Mm,
I believe, and whatever in last many years of my experience says, is that the risk doesn't come from the market cap. It comes from not understanding the business well. I think that's where is a kind of a disconnect. In a sense, if you understand the business well,
mm,
then you also understand what is the kind of a risk.
mm,
Okay. And if you are doing that,
mm,
then you are managing the risk in a better way. So you know in the future what kind of risk will emerge in this business,
mm,
and then you are aware. And whenever there are those initial signs of going on that path, you are able to take better action. I think Nishad also has a that thought process, is that you when you want to generate better returns, you necessarily don't have to be very go into risky investments.
mm,
If you understand the business well, if you understand, do your homework well, I
mm,
think the kind of risk you can always
mm.
bring it down.
Yeah, and also people generally associate with market cap, and this is not
Exactly.
the case. Yeah,
Exactly.
depends
So
on.
one mega cap in a oil industry, how much do we know about that business? So
Right.
I feel that is the highest risk we have, rather than investing into some bakery company where you can go and touch and feel and do better analysis.
Okay. So this question is dedicated to MFDs. My next question. So many MFDs meet clients and talk about markets, but they usually provide only broader perspective of the market. So how can MFDs build day-to-day market knowledge so they can discuss markets more confidently with their clients?
So I maybe I have a different perspective here.
Mhm.
I'm not sure really whether MFDs do they have to understand the market bit
Mm.
by bit, day by day.
Yeah.
I think maybe out of curiosity or interest they would like to know that, but do their responsibility or role demands that, which I feel don't.
Mm.
I think for MFDs, I mean, it's good to understand, but what investor is seeking from, I mean, as I told in last 25 days, I have traveled almost 26, 27 cities,
Yeah.
and I have interacted with a lot of MFDs. They're doing superb job, advising the investors how to go about investing, how to set your goals, how do you fund those, those, how do you achieve those goals through
Mm.
equity investments or maybe mutual fund investments is what is more important. I
Mm.
think what investor is looking at is the three C's I can say, and one D,
Mm.
where the MFD plays a bigger role. One is that context. I mean, investor wants to know
Mm.
why the market is doing what it is doing. He
Mm.
just wants a rational answer. He doesn't want day to day, bit by bit, why it has gone up by 50 bips, 50 points, or failed by 45 points.
Mm.
Then there is a calmness. I mean, you have to support that key. Is this a time, should I act or should I stay, stay the course, continue with whatever the course is, and I will do better.
Mm.
Third thing is, I think you have to instill confidence in them. Does I mean, he also wants to understand whether that MFT who's advising me for my well, does he really understand what is he talking about? I think
Mm.
that kind of a confidence is also very important.
Mm.
And the last D, which I mentioned about, was the discipline. So I
Okay.
think MFD will able to contribute better, or maybe if they are able to
Mm.
instill this discipline of investment in an investor. I
Mm.
think that should suffice for them to be better than many more.
Mm. Great, 3C and 1D. So, Aparna, the wealth company has recently launched FlexiCap Fund and Ethical Fund. So, can you help us understand how these two funds are different from other schemes?
Correct. So FlexiCam, as the name suggests, it's very flexible. I mean, we will be switching between different market caps depending upon the investment opportunities each market cap offers. Uh, So it will be concentrated, in a sense, optimally diversified with 35-45 number of stocks. It will be sector agnostic, and it will be high conviction ideas, stock selection. So what is different in ethical is that, and the benchmark is NSE 500 for the FlexiCap. In ethical fund, the benchmark is Sharia, NSE Sharia index. There are almost 200 stocks, 210, I think, to be precise. And our ethical fund has a leeway to invest up to 20% into financials. Okay, so this is Sharia plus financials. So while FlexiCap will have maybe a different sectoral allocation because the index has 35% into financials, uh, ethical will have maximum 20% in financials. Plus, it will be a little more mindful about what are the sectoral weights, and that's how we will able to differentiate between these stocks. And it will be still optimally diversified. It will be high conviction ideas for both the funds, but
Mm.
only the sectoral composition will be different for both the funds.
Okay. In ethical, apart from the usual ethical way, are you integrating any other thing like Sattvic theme is there? I
Yes, yes. So in ethical, we have a negative screening. In a sense, we will not invest into alcohol,
Mhm.
tobacco,
Mhm.
gambling,
Mhm.
animal killing, pesticide. These few of the businesses which are harmful to the society and supposed to be harmful to the society. So that's the kind of a ahimsa or sattvic theme
Mhm.
rather than a Sharia theme.
Mhm. Got it, got it. So Aparna, why should MFDs recommend these two funds if there are already funds in the similar category with a strong track record?
Uh, with a strong track record, I
Yeah,
think
with your name.
maybe we'll have a different perspective. But I think the flexibility, I mean, the as I initial listing my remarks,
Mhm.
what is our learning or what have we observed and what do you feel we can do better than many of them? Is what with the agility or maybe with the learning, we will able to have a better switch between different market caps. Another thing is that we have seen the importance or the benefits of the sizing, so we
Mhm.
will be optimally diversified, not have a long tail where there are stocks which, when you are talking about 60 number of stocks, there
Mhm.
will be some stocks which have marginal weights, less than 1%.
Mhm.
Now, why that stock should be there? Why,
Mhm.
if it is there, why it should not be more than 2% or something like that? And what does it imply? I mean, either you're not very, your conviction is not high about that stock. You're
Mhm.
just taking because somebody else has taken, and it is just trending, and that's why you're bought. And
Mhm.
then sometimes it happens that because it's a long list of stocks, those stocks with a lower weights tend to get neglected, tend to get ignored, and that's where the accidents happen.
Mhm.
So as a discipline, I don't want that kind of a inertia in
Mhm.
my investment to be set.
Mhm.
And then another discipline what we are planning to implement is that when you are investing, you should have at least minimum 2% in a stock. That
Mhm.
says that you have to do proper work, deep dive or due diligence,
Mhm.
and then you are more responsible because though percent stock, if it goes down, it has a larger implications on the portfolio performance, and then you will be more active on taking actions. Is what we are anticipating.
Okay. So one question has come to me on WhatsApp. So the MFD wants to understand what would be the impact of GST on the equity market, especially on the consumption side.
I think GST rates have been brought down, and effectively, the companies will have, kind of will be passing on that savings to the consumers. So it
Mhm.
will be better for the consumers. I think they can buy more with the same amount of money which they have.
Mhm.
That's giving a fillip to the consumption is what that will revive some at least for the long term, the recession may not hit, or
Mm.
there are government is showing that they are well aware about the troubles, and they
Mm.
are taking these steps to revive the consumption and the growth of the economy.
Okay. So one more question. What would be the fund house philosophy with respect to the equity fund management?
Sorry, I didn't get this. I think
Fund
I spoke
management.
about the investment philosophy.
Yeah. The investment philosophy of the fund house process.
Yeah. So we have refined, or maybe we have laid our philosophy as it's a dual engine,
Mm.
change plus age. So change is the we have attached one important factor to this philosophy of change. C for
Mm.
the capable management, H for the historical performance of a company, operational performance, financial performance. A is attractive valuation. You should enter at a reasonably right price for to be able to generate better returns. N is navigating the business across multiple cycles so that that you have a longevity and sustainable profitable growth. And G for the governance, unless and until the company is follows the good standards of governance, it is difficult for that company to survive for long. E for the earnings growth, that is, these are all factors which are more related to the internal environment of the company, which are more controllable by the management. But this is all about earnings growth, earnings. But there is a, for a stock to perform, there is
Mm.
always a valuation growth, which is a second area of growth, which is not controllable by the management, and it is more of an external environment. So we have an overlay of age, EDGE, which includes again important factors attached to every alphabet of this word. Exchange related factors like price, volume changes, volatility index. D for the domestic factors like interest rate or GDP growth. G for global factors like FI inflows, outflows. They also impact a lot of valuation parameters. And then the last E is the most important E of this philosophy, which is about, as I said, exit or rebalancing. That's what I mean. This is a part and parcel of the philosophy. So when you are entering at the top, we are very kind of conscious about all these factors, and the decision making is better and more agile is what we intend to do.
Okay. So one last question, Aparna. What are three lesser known facts about equity markets that MFDs must know?
I mean, I would like to defer that there are no things which MFDs don't know. The way they are, kind of supporting, and so many different things they are doing, it's really amazing. But
Mm.
still, I think what needs to be imbibed on the investors is that see, returns don't, they come in clusters. They are not uniform.
Mm.
Just to give you an example, from 2003 to 2023,
Mm.
if an investor would have missed the 10 best days of the equity markets,
Mm.
the returns may would have been at least 40% lower than what we would have made. So that's why I said the discipline. I mean, and now there is a beautiful thing where you can do daily SIP. Go
Mm.
for it. I mean, I'm suggesting it to park your money into liquid or arbitrage fund,
Mm.
and from there you start doing daily SIP, because your averaging is done very well.
Mm.
All the days of the market, when the market is open, you are investing. So
Mm.
that's the important factor which feature what the SEBI has allowed us to do. I think that's very important. And then broadly, I think rather than three, this is the most important thing. And high valuation actually doesn't mean that they are going to markets are going to fall immediately,
Mm.
and neither low valuations don't guarantee you immediate good rebounds or something like that. So it is all steady state. Some
Mm.
market is volatile, it's dynamic, and it has to be dynamic, and that's how you are able to generate returns. that's
Okay.
the that's the characteristic.
Okay. So, all right, we have come to an end to this interesting session. Thank you so much, Aparna, for your valuable time and inputs.
Thank you so much, Nishan. These questions were really, kind of a drill. Thank you so much. Please support. I mean, we all need your support.
Great, great. And finally, I thank each one of you for being such a wonderful audience. Have a great day at work, guys. Thank you.
Thank you. Bye.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.